Today's session is a great testament of the perils of dip buying in a bear market. The market indices are oversold as measured by numerous breadth indicators. And no wonder there are traders who are trying to time the market and get in early before the anticipated rebound. There were traders today who went long on the intraday price recovery. Let me show you the tape. The NQ tape, which is at the right bottom, was sort of mixed yet had a lot of long transactions. But the ES tape was heavily dominated by the bullish bets during that intraday price recovery. Clearly, those bullish traders were expecting the market to stage a V-shaped recovery and close the session in a positive territory. Well, instead, these futures traders are currently in red as the market continued to drop in after-hours session. This is not the first session where dip buying didn't work for the bulls. It suggests that not every rebound should be bought. But how do we know which one is worth buying and which one should be faded? There's an indicator which might help us with answering this question. You see, when the index is staging a intraday recovery after the morning sell-off, we want to make sure that the rebound is supported by the stocks that form this index. In other words, we want to make sure that the breadth supports the underlying price action. And which indicator can help us with this assessment? The Nasdaq's advancing minus declining issues indicator is the one that can accomplish this task. This is a breadth indicator which measures how many stocks that are part of the Nasdaq's index are advancing and how many are declining. The Thinkorswim platform actually offers two different indicators. The one for Nasdaq 100 and another one for Nasdaq Composite. I use both of them in my analysis and decision making. Here's today's chart. The Nasdaq 100 indicator is on the left and Nasdaq Composite on the right. The Nasdaq 100 indicator oscillates between minus 100 to 100. The Nasdaq Composite usually moves from minus 2500 to positive 2500. Whenever the market is trying to stage a rebound, I want to see both indicators move above their respective zero lines. If that happens, the breadth is supporting the price move. However, when the price moves higher by itself, there are reasons to be skeptical of this move. In today's session, the intraday rebound was primarily driven by the large stocks that are part of the Nasdaq 100. As you can see, the Nasdaq 100 advancing minus declining issues did move above the zero line, however, it didn't stay there long. The problem was that the index move higher was not supported by the broader market. In other words, the Nasdaq Composite was clearly lacking momentum and didn't get close to crossing the zero line. This type of negative divergence happened numerous times in the past. Let me show you several additional examples when the price tried to recover. However, the rebound was not supported by the Nasdaq's advancing minus declining issues indicators. Also, I will share some of the examples where the intraday rebound came on rising breadth indicators, which resulted in the index closing the session in a positive territory. Enjoy.